right, good evening. Starting right on time, 7:30. Alan, good morning, good afternoon, good evening. Alan, Andy, what are you doing here? Andy, get some rest. Good to see you, sir. Thank you all for joining us. We're going to do a quick, brief session tonight because many people will want to hear, or you could tape record, or many people will not really care to hear. But either way, it's your choice. President Biden is speaking, giving his adios amigo speech, I guess it's called, is one way to say, or hasta la vista, baby. I'll be back. He's not doing the I'll be back one. All right, enough of the comedy act. Here we go. Risk disclosure. Trading involves risk of loss. And what I wanted to point out to you is this is a weekly newsletter we put out. And a couple little things that I just wanted to highlight is not just recent trades, but where do we get the analysis to make the recommendations? So one of the things that I always that we did back in the old days would be 50 years ago, and which doesn't seem that long ago. I guess maybe 42 years ago, maybe 30 years back in the 80s. You plan your trade the night before, right? So we did pivot analysis. We did it by hand. For many of you, you do understand the pivot point formula. We take a high-low close divided by 3. Based on today's action, it'll give us tomorrow's typical price or the pivot point. And I'm going to get into that a little bit tonight because that's very important. It's a part of a strategy that I actually employ, that I look for particular trades. So when markets, my typical rendition is when markets are below pivot, it's not a good thing. If a market's truly bullish, the market should trade north above a pivot point. If the market's truly bearish, it trades below pivot point. In any event, we did have a situation here that developed last week on the weekly charts. It may be hard to see this, but this is our newsletter. I do this every week, week in, week out, when the markets are calm, and I can objectively look at the markets, and I'm not in a hurry, and I want to do my analysis. And a few things you'll notice on this chart, and I just want to share this with you, is whatever platform you have, Wealth Charts, which now I'm proud to say has our indicators on it. Trade Navigator. Trade Navigator, I worked with Glenn Larson and back in 2004 is when, 20 years ago, it was 20 years ago today, not today, but it was 20 years ago that we worked with Genesis, who said, John, I can put a lot of your work and what you do, and we can program it on our platform. And actually, I don't think I've changed this particular page in at least 15 years, if you can believe that or not. There's nothing really to modernize of what we've put together. But what's on this chart is simply a daily chart above and a weekly chart below. And the daily chart has what we would reference as weekly pivot point analysis, and the monthly on a weekly chart. So the candlesticks on the bottom row are weekly candlesticks with monthly person's pivot projection. Last week, we actually hit the monthly pivot resistance, which I'm pretty sure I commented on. But more importantly, in the NASDAQ 100, we had this PPS sell signal, which also, if you notice, that's a little bit of a candle pattern we reference as a doji. There it is. That's a doji, a low close doji. And so this is kind of gives us important information that another thing that happened is, as when the market closed on Friday, so regardless whether it was CrowdStrike, Microsoft, whatever the issue, it doesn't matter, but you'll notice that the market closed below the current weekly pivot, and it was targeting this week a bearish range. So when the markets, in other words, it was targeting for this week a lower projected high and a lower low. So across the board. Now, one of the things that you'll notice is that the Qs, the NASDAQ, was a lot more bearish with a lower high and a lower low projected for this week, as was the Spider relative to the Russell. This is the IWM. So what we're looking for is maybe a rotation out of mega cap or NASDAQ related stocks and possibly rotating elsewhere, which is what this kind of insinuates with the other indicators that are on here, which is advanced decline cumulative ratio for the NASDAQ, advanced decline cumulative ratio for the NASDAQ ND. ADCND is not a rock band. It is the advanced decline cumulative line. volume, seasonal trend. So if we come down here, I do my work, and just to give you an idea of what we're looking for, and I know Monday in the live trading room, what I like to do is typically go over the work that I just did. This newsletter comes out on Sundays, generally speaking, unless I'm on a vacation or something special is up. But basically, we said the weekly person's pivot in a bearish mode for SPY and Q. That's a very important observation. It does remain bullish for IWM and Diamond, so it does reflect a rotation. Now, we also get a seasonal trend that the market enters a decline in early October. So it doesn't mean that we're going to go straight down. We get ebbs and flows of the market, and I think today was a little excessive. But you'll notice here, we hit the monthly pivot. I talk about this expressly because it is very part of my work. I wrote a book 20 years ago as well called Candlestick and Pivot Point Trading Triggers, a very popular book. Many of you have read it, have it, or you bought it, and it's a great coffee coaster. I'm not quite sure. But I could just tell you that this form of market analysis, while nothing is perfect in this world, I could tell you right now is a very powerful and helpful tool, because a couple things that we also are big on. It's not about price. I talk about the condition of price. And when we get negative technical readings, like my old boss and mentor, George Lane, who invented stochastics, I'm still a fan. Volume, using the on-balance volume, and breadth with the AD advanced decline, we were seeing negative technical readings. So I said I would not rule out a decline back into the 530 level by mid-August, which is, a couple weeks away. I didn't think it would happen 3 days from now. Well, we're not quite at mid 530 level, but we're still looking to sell rallies, especially this week, if retest the highs or show weakness near the weekly pivot resistance of 560. Very important line. In fact, I'll just go straight down to the chase. What was the big trade that we were looking for? Every Monday we come in here and we place our orders. I was looking for a market to rally a bit near resistance and put on some trades, especially a 15 wide bear put spread for the September expiration 545 and a quarter. So that was one of the recommendations we had. We also had a long time standing play to buy Devon Energy and Fastly, which is in the data center or actually cloud storage space. So a few of our trades that we also had on, previous week I was on a vacation, but we were long Tesla from 182. We exited around 246, and Snowflake exited that. And today Snowflake, which is enterprise software with cloud storage, and it actually came back below where we initially were long, and we trailed our stop. We got stopped out with a profit. We were long at 29, got out at 35 and change. And I'm looking at getting back into that trade, Snowflake, and I'll give you some setups for right now. Also, you'll notice here, Pfizer have been long for a while at 25.68, Biogen in the healthcare, and Gilead Sciences. Cohu actually, and Fortinet, and unfortunately that trade's not going to work out. But let's take a gander of the performances, and where I think it's important is, here's some of the recent trades that we put out, and more importantly, how I discover these and the analytic process. And I think that's what's going to be important today, because we've had a really, I would say, PIA market, pain in the keister. It's been we'll say it's a pick market, pain in the keister. And one of the things that I think that's been a test has been on traders' patience and discipline. And it's definitely been a test on patience and discipline. It's been thin volumes. I've been saying almost all year, and everyone's been complaining about the same thing. It's been the same old rally, the same old names. It's Meta, it's Nvidia, it's Apple, it's Microsoft. Occasionally, it's you'll get a move out of Lilly, and then just this week we also saw GE Aerospace take off again. But those cap-weighted names have really been taking the shine for the rest of the market, because here's the reason, in my humble opinion. There's not a lot of equity that would normally be in the market or was in the market, because a lot of money pulled out of equities and went into T-bills. Even Warren Buffett was probably estimated to be now 6.5% to 7% of a holding of the of T-bills of what's been offered over the last year. Now that information I think came out from PIMCO. So if you think about it, even Warren Buffett used to say on CNBC, when Charlie Munger was alive, he'd said, "Hey, Charlie and I are the first guys in line to buy T-bills every Monday morning at the auction." So there's a huge buildup of cash outside of the equity market. So whatever market's in the equity market, it's just been slugging around in those AI, artificial intelligence / mega cap names. So how do we come up with finding trades? And I think a couple things that we look for is, as I said just a few minutes ago, this market has been more likely testing the fate of patience and discipline of traders. And I think this year's also been kind of frustrating for a lot of people, because you look at this magnanimous move in the equity market and not much else moved. And so if you don't have exposure to that, it's been a frustrating move. The weak keep getting weaker. Consumer discretionary stocks, you have stuff like Walgreens at 30-year lows. CVS was a darling 2 years ago. Nobody wants it. Estee Lauder, no, China's bad. No one's using makeup. It's going down. Texas Instrument, China's actually buying up everything we've got. And so you get these, what we call, disconnect from the storyline that everyone's putting blame on one. When their stock goes bad, they blame one item. When a stock does well, they give credit to that one item, namely China. So there's been a lot of that kind of thing going on. So the market's been subjected to a lot of headline, obviously visceral news has been very, very emotional. And I think if we can eliminate emotion, and a lot of people have had problems, a lot of traders have had problems. And a lot of the issues is maybe people got scared out of the market and they lost opportunities. Maybe they've been over trading. Now, overtrading is a big word, because it doesn't just mean trading in and out. It also means having the wrong size on. And there's an old floor traders phrase we used to say, whenever you're right, you're always in one. Whenever you're wrong, you're always in 100. Now, when it came to commodities, remember, if you're long and you're right, you're in a one lot, big deal. But when you're wrong and you're long 100 and the market's going down against you, that's a big deal. So overtrading, not being properly positioned. A lot of discretionary traders face that issue. And I think in order to succeed, to make money, you gotta solve that problem. You have to pick and choose your spots in the market. You have to not follow the flow sometimes. And yes, I understand. Sometimes following the flow and following the herd makes people a lot of money. It happened with Bitcoin. It happened with GameStop. It happened with meme stock trading. And it works until it doesn't. But it's not a consistent program. But I know that if we can solve, and if I can show people how to maybe pick and choose your spots and remain disciplined, I think your account performance improves. And that's it. So one of the things that I'd say is the solution is to choose the best workable strategy and continue to maintain a system. We have that in our own live trading room, and we use trading models for that. A lot of the trading models are based off of what I wrote in a book 20 some odd years ago that still work to this day. And I'd like to share some of that with you that we provide in the live trading room. So first and foremost, I'll go up, and what I wanted to share with you is this platform right here, TradeStation. Now, I use Thinkorswim. We have Thinkorswim up. We have, obviously, in our live trading room for stocks and equities. But this platform right here, TradeStation, when they came out, I first purchased a Mega 4.0. I believe it was a Mega TradeStation, and the version was 4.0, and I think I paid $3,700 for this software back in we have a debate. I say it was 96. My wife says it was 97. So we're going to go with what my wife says, 1997. In 1997, and I think pretty sure it was 96 though. In those years, we were able to have a product that I could program, and they had kind of like drop-down menus of strategies, moving averages, technical analysis for futures trading. It's obviously evolved through the decades, and it's still today, and I would have to say, one of my favorite platforms. Why? Because of this thing called the radar screen. Now, I just went through about talking about pivot points. And so I want to start there. And one of the things you'll notice is on a weekly basis, you see these colors. This one's gray. I can tell you right now that means that whatever Thermo Fisher, TMO, it's above its weekly resistance. Gray colored means if the weekly resistance, which was 552, or 550, whatever it was listed at, we blew right through it because we're at 574. If you notice here on Quest Diagnostics, DGX, it's green, 139. That means the price action is trading at or near its weekly pivot support. See support right here. What I look for is buy signals of markets that are trading above the pivot. And with today's action, which is interesting today, and I think this is the rotation that we're going to probably start to see. Now, whether it's sustainable, whether it's the one-day wonder, we'll have to kind of watch this for tomorrow. But in the debacle that we saw today, almost 3.5% down in the Qs and the NASDAQ 100, the S&Ps, there was a lot of stocks that had ginormous upside moves. Bristol Myers, left for dead. Nobody wants this. It has earnings Friday morning, so we got to be a little careful there. Abbott Labs, AbbVie has its offshoot. AbbVie has earnings out as well. Johnson & Johnson, but one thing that you see a common denominator is that these markets were all already in weekly buy mode. Johnson & Johnson reported earnings. The market is trading north of their pivot points. That's one of the key elements that we saw in the market today. Baxter Lab, GlaxoSmithKline. Medtronic's not a pharmaceutical company. It's a pharmaceutical or it's a medical device supplier. Pfizer, which I already shared with you, I'm long the position. It looks like there's a lot of other people long that position as well. So we're seeing the rotation in what was, you take a look at Pfizer and go, all right, maybe it was the COVID vaccine and this and maybe they were trying to price in more sales for COVID vaccines. But one thing about Pfizer, they also have other drugs and a veterinarian. People, we don't think about this, but you have a dog, you have a cat, take it to the vet, probably going to get treated with some kind of a vaccine provided by Pfizer, by the way. So there's other areas, and I'm not a medical expert by any stretch of the imagination, but I do have knowledge of what each company does. And so for me, when I'm trying to look for opportunity, there's several things that I look for. One, I want to see, is the market, how is it respecting its pivot point analysis? Number one. If the pivots are projecting a higher high and a higher low, that's a pretty solid indication. If it respects that outlook, then the market trades north of the pivot point. We also have this thing that's available on Thinkorswim. Now, Thinkorswim, for any platform in this planet, they really put together a hell of a program. And the one thing that has not happened is they haven't screwed it up. It's still one of the most robust platforms on the platform. Still has my indicators on there. And that, as you will see here, these little arrows, those are the PPS indicators. Now, on Thinkorswim, unlike TradeStation, it has this radar screen. And I am able to go up and down with a flick of a mouse and find out how many stocks are trading above the pivot with a brand new fresh buy signal or sell signal, by the way. And that's one of the things that I think that for me is paramount in helping to determine new fresh buy signals. So, or sell signals. So when I take a look at things, I in the email invitation that you guys may have gotten for this, it says, what are the other indications that you look at in the marketplace? So I want to talk about a few things. Monitoring vitals of whatever strategy you're using. How do you improve as a trader, right? So there are people that make money in the market. There's no doubt about it. What you need to do is examine, and some people talk about journaling, write down what worked, what didn't. What's interesting about TradeStation and what other products we have here is in the live trading room, this is actually the live trading room, the algo room. We have a model for the NASDAQ 100, which we just added, but we had this for a private event that I did a year ago. And so this is a model that, again, and I'll expand this up and I'll share with you what's behind this model right here. So bottom line, when you see an entry and a green line, that shows you the entry and it shows the exit. It can't be, I really don't think it can't be any more transparent than that. So this is the system on the NASDAQ 100. It went short a week and 2 weeks ago. It covered that short, had a little rally. It missed this downdraft. It missed this updraft. So it's not going to take every single trade. But let's take a look at the performance real quick and say, is it worthy of following? So it is at a new all-time equity high based on the last 2 years of backtest in its performance summary. Its profit factor, it could be a lot better on the upside. Maybe a 2-to-1 would be pretty decent, like off the charts, pretty good. Its profit factor on longs only is over 2.16. Its profit factor on the short trades, because we've been in a bull market, over the last 2 years, it's not done that great on the short side. How is it done overall with the overall market? So if you just bought and hold in those last 2 years, your rate of return is 44%. On this account, it's about almost, not quite 9 times greater than that at 401%. So again, it does reflect a better rate of return, but trading in the market. Now, maybe you don't trade it all the time. Maybe it's a trade. Maybe you don't get filled exactly, but it's a great guide, and it actually does show when and what is the system based off of. Now, that's what I'm going to show you right now. What is this based off of? A couple things. So let's go to studies, and I'm going to just open it up for you. We created on TradeStation, using their technology, my ideas, we programmed everything that you're about ready to see here. So the power of creating a system is that you can find out and optimize and find out what's the best profitability of a market. With this particular program, we came up with the idea, hey, what if I start it in the futures? If I wanted to trade futures, what if I start trading at 1 in the morning? Well, I don't know, maybe 2 in the morning is better. What's more profitable, to start trading at 1 in the morning or 2 in the morning? If you're not sure, guess what? We could input start time, we could input end time, and we could add minutes off the start and the end time, subtract it, and the computer would optimize the time slice that we want to analyze, and it would say, trading from 2 in the morning to 4:30 in the morning, it provides optimum X amount of percent of profit potential. So that's kind of one of the things. Now, let's say you're a futures trader and you say, I want to just trade right before the open, and I want to be out before the open, and I want to trade from lunchtime to the close. And I don't want to hold a position at the end of the day. So we programmed those availability, that logic into the system. Another thing we did was we got 3 different types of position calculation methods. So why is this important for me to even share this with you? Because this is the kind of stuff that traders have, and I'm pretty sure, and I know for a fact 2 hedge funds use this product, and others use stuff like this. They're programming, and I wouldn't call this artificial intelligence because we created this back in 2016, a long time ago. So basically what we're looking at is the ability for retail traders to self-program and give themselves a better edge and make their own trading systems based off a few ideas of logic. And the logic would be position sizing. Should you be in? And we created this idea. Maybe we should have a choice. What's the best choice? I want to buy $100,000 worth of an ETF and put me in as many shares as possible. So that's why you see 201 short positions right there on the Qs. Now you could use leveraged ETF, whatever, but the rate of return of this particular platform was based off $100,000 nominal account size, position value. But if I change that number to 2, it's going to put in, and I change that number to maybe $3,000. So per trade, put me in as many shares as possible as my account can hold, and you got to input the account value, and put me in, but I don't want to risk any more than $3,000. So based on the parameters, it will put you in a lot of positions if you want to go by position risk. And then for futures traders, if you change this number to 3, you can put down your position size. And for futures, we always default with 2 contracts, so we can either scale out and then run optimization on scaling out by at least half a position. So you can put in 10, you can put in 5, you can put in 3 if you want and not scale out of anything. But at least having position calculated, that method right there, that logic, it allows us to understand what our value of risk and rewards are. In the money management, max trade loss. If this thing, I don't care how great the strategy is, if this thing's going to lose me less than 2.5% of my portfolio on one single trade, and it hasn't stopped me out, then that's the ripcord. Get me out. On the other side of the coin, if in a given day I'm up 2.8%, and that's what I didn't come up with these numbers. Look, the optimization function of TradeStation allowed us to program this in. I put a random number of 750 to 4,000, and I want to know the increment based on $50 per risk per strategy. And then the computer came out and said, "This is your number right there, and that's going to get you. That's going to get you your best odds of success." So, bottom line, what does it take? We have a function here on reversing signals. If you're long the market and you get a sell signal, should you get out, or should you let the long position trade on its own merit with its trailing stop function? And that's where you can find out. You can optimize true or false. I'm just going through, in this case, I didn't want to do that. We're going to cancel that. I'm not going to run that. But you'll see here PPS buy, and that's the essence. This strategy runs on a PPS buy and PPS sell signals, which is interesting because even despite the fact that the market's been a bull trend, the optimization function kicked out probably one of the better profitability models by only having a 2.25 to 1 risk reward ratio. So that was interesting on buys. Versus sells, you get a little bit more risk reward ratio, 2.5 times risk to reward, which is not bad. I mean, most people look for a trade of a 3 to 1. So this is something that's within the realm of reality. So I just wanted to kind of focus in. There's a few other things we do: high and low close doji. How many periods should we be holding? What's the longest holding period? And this strategy is 22 bars. So if you figure 22 bars, this is another little tidbit of information you probably want to write down, because on swing trades, what's interesting is I didn't make that number up. This gets optimized, and you click here, optimize 10 up to 22. I can run it up to 30. Give me the best optimization. What's the max holding period to milk a winning trade? And in this particular model, the results came back as 22. So what does that mean? 6.5 bars, but TradeStation doesn't recognize a half. How many hours in an open hour session are there? Think about it. 1, 2, 3, 4, 5, 6, 7 bars. So this is looking at max bars, 22. So what would, if there's 3 times 7 is 21, so it's about 3 days. 3 days is going to be its max holding period. If the market's in a trend, about 3 days gives you your max trading session. So I think that's kind of like, this is based on TradeStation. So CryptoCat says, I know you were buddies with Sosnoff. Did Tom have nothing to do with this? This is actually TradeStation. Tom didn't have a single thing to do with this. In fact, I actually brought this to Tom, and he goes, "John, I can't put this anywhere on Tasty Trade. That's leading people to trade. It's an SEC violation, and we own the brokerage firm. You can sell your signals, but we can't have something like that." And I actually showed it to him for Tastyworks, by the way. That's a fact. So just so that you know, what is on Thinkorswim that Tom and I worked together was to put, when Tom and Scott Sheridan had Thinkorswim, before they sold to TD Ameritrade, before TD Ameritrade sold to Schwab, just to give you a little background history, CryptoCat. Sorry for the bells, but what was really cool is that we worked together to put the pivots, the PPS, and then we added the PMC indicator on Thinkorswim. So if you don't have TradeStation, that's great, but I just wanted to show you the power. Is PPS work? Is there a strategy? How do I develop a strategy? And with TradeStation, it allowed me to not only build strategies, optimize them, and use my work, but also come up with some pretty decent winning trade strategies. Now, the S&P 500, we take a look at this model, strategy performance, just give you the quick graphs. It just went into a little downdraft. It's still got a fantastic rate of return. Why did it go in a downdraft? Well, let's take a look real quick. It got short. It got stopped out. It missed this upside run. It's been choppy and sloppy through the summer. Short, stopped out. Long, profitable. Short, profitable. Got stopped out. Got short right back on that freight train. And that, I think, my friends, is the biggest trouble most traders struggle with. They make money. They think the trend is over. And a signal generates. And they go, well, I'll just wait. And unfortunately, sometimes it doesn't work. So here's a strategy. It went long. It got out first thing this morning on the open. What did it do? It actually reversed and went short. So it still has a current position on a short position on the SPY. So as an indicator, if you're sitting around and you're going like, well, it's long, it didn't do that bad. It was making money up until this morning's crazy open. But this thing said it acted like it should. It traded off logic. Market's long, market go down, long is wrong, reverse, go short. Go short. I can't predict as much as I think I can, and I'm horrible at it. If I told you that today the market would be trading at 541, you know I'd be full of it, because I wrote a newsletter on Sunday that said I think the market's going to be in the mid 530s by mid-August. So, I mean, to be able to predict the precise second things move, I think that's the thing. You just got to go with the flow. And that's where an automated trading system, or it's some sort of a strategy, helps traders be focused. If the market is near a resistance, then go short. I have a real simple rule. If we're near pivot point support, I don't like to sell short. If we're near a pivot point resistance, I don't like to buy it at resistance. And so I think those are very simple rules. So there's a couple indicators that I do use, and we use them very efficiently. And that's why I say what worked, what doesn't work, and I can qualify exactly what that sentence means. What worked? Did this signal work? No, it did not. Why didn't it work? Well, the market opened lower and it stopped itself out and it took a small risk. That's pretty good. Does it have more winners than losers? How frequently are they? So these are the kind of questions that you got to examine and watch. I think everyone here, hopefully as an adult, grown up, and knows that not every trade is going to be a winner. I mean, unless you're going and you're scalping for a couple ticks here and there, and you can say, look, I got 37 winners in a row. And I've seen that before, and that's okay. But that's not really going to make a lot of money, right? So we need to define sticking with a trend. Some of the interesting, I think you'll find this very interesting in the future, is that normal trends of longs or short on average have a holding period of 3 days. Now that's maybe 21 bars. So maybe it's 4 days if you consider the last hour or the last half hour it generates a signal or a trade, and now you're going to be in, over the course of 4 calendar days, or actually 22 bars, right? So that could work. Now, there's another subject that I like to look at, is to know your market environment. What's happening here? Did ATR, now if you don't know what ATR means, it stands for average true range. And average true range is a very important function of understanding market condition. So with that, let's go over here, and I'm just going to go over to look at the, we'll go top to bottom, and let's just take a look alphabetically. We'll go right to S&P, the SPY. So you'll see where it says average true range. So the ATR for the S&P, and I use personally, and I'll share that with you, and edit average true range so that you can see it, is 10 periods. So I'm just being fully disclosing and being fully transparent for you guys. Okay? 10 period. So most platforms have a default of 14 because Wells Wilder, he was a commodity trader, not a stock trader. His best work, I think, is ATR. A lot of people look at RSI instead, and an overbought, oversold market reading. That was also developed by Wells Wilder. Wells Wilder did the DMI. He actually even had a pivot point system, by the way, and it was a little convoluted and a little too extreme, and I don't think it really worked that well. But neither here nor there. Wells Wilder's best work, I think, was ATR and how it's defined. And I'm not going to get through the details. You can Google that. But bottom line is, I want to know, how is the market now compared on average to the last 10 days range? And you'll notice today in the S&Ps, we've had a 7-point range, a 7-point handle ATR in the last 10 days. And that's kind of that's a little increase. You wouldn't notice unless you're tracking it. What did we do today? We exceeded it. On average, I like to see where a stock or an ETF is relative to its range. If you have a company like Tesla with maybe a 10-point average true range, and the stock is only at maybe 7 on a given day, not today, any day, you probably have the inclination that maybe there's a little bit, if it fulfills its destiny of its average true range of $10 and it's only at $7 so far, maybe there's a little bit more wiggle room in the trading range for the day. So number one, that's another element. But most important, and I want to go through this real quick with you, the ATR, the average true range. I have it in our charts, and this is the S&P 500. And I promised this was going to be a quick, short, fast event tonight. And I know you guys, we got President Biden speaking, and we're going to kind of wrap this up real quick. But I just wanted to point out to you a couple things here about ATR. This is the 10-day. There's the 10. This is the actual 10-day ATR. Now, like I said, you aren't going to know if 6 is a lot or not. But just keep in mind that from May to all the way through the last week and a half, we were trading in the upper 3s. So the average trading range has appreciated, and that's one of the warning signs that we look for. A clue that there's an increase in volatility is when trading range start to expand. And one of the things that happens, just like over here, notice as the market starts to expand in its trading range, what is the ATR doing? It's starting to uptick. And what is that warning us? It's warning us that there's higher velocity and more wider trading range. What does that mean to a trader? Well, generally for the equity market, markets go up slow and small in steps, and then they come tumbling down in wider ranges as everyone's heading out the door. So when you start to see an increase in ATR, it's also a sign, a clue that we're coming into maybe precarious times. And that's where we're at right now. So I would say, how much lower can the market go? There's a gap in the market. There's a gap above the market. There's gaps below the market down here. What's interesting about the market, and I just wanted to give you guys some insights on this, is by August, I think we are going to see more decline in the market, but it's going to be up and down. It's not going to be, even when we had big range breakdowns, the market still struggled with making rallies. So in this case, I would say that the market is probably going to have, it's already up. I'm cheating. I know that the S&Ps are up, but I would have to say in the night session, I would have to say that somewhere around the mid 40s, 544, just like I said this weekend, if we rally up to that 566, put on some puts. And that's exactly what we did. We rallied up in yesterday, and then we failed. And then today we opened straight down and came crashing down. If the advanced decline over the next couple days, which we've got Thursday and then Friday's the PCE number, if the breadth of the market, the advanced decline continues to weaken and the market starts to maybe do this back and fill, that's one of the two things that if you don't have access to the advanced decline on the S&P 500, keep your eye on a 10-day ATR. If the 10-day ATR continues to expand and stays above this 6.5 number, odds are the correction's not over. You get a dead cat bounce, because if the market is going to pause what normally we see is before it starts its ascent again, we start to see the ATR starts to decline. This is not declining, it just begun to ascend. So again, anytime we get into periods of heightened volatility, and I'm not talking about the VIX, I'm talking about trading conditions. And again, that's the key word, conditions. If you'll notice here, we started to rise in the ATR. What happened when we started to rise in the ATR last September? The market started to sell off hard. And it stayed up there. It stayed up there. It stayed up there until it started to form a lower high, lower low. And then it was kind of safe to get back in the water for an uptrend. So ATR is a really powerful tool if used correctly. And that's what I want to look at. Again, you want to look at the size of your risk, your drawdown. These are other things that we can go over with more time. But I definitely wanted to give everyone an idea in tonight's session. Is the correction over? And there's two things that I would have to say. No, I think there's more downside coming, but it's not going to be straight down. Number one. Number two, everyone talks about the Russell. Is the Russell the real deal? And I believe the Russell is a real deal. Now, we could, I think that partial positions going out to September, I think personally that this market, if we've done some analysis, the longer the sideways trading range, the bigger the breakout. This was a decent breakout. It had accumulation of advanced decline work, breadth, in other words, participate in the rally. Volume has been pretty good. But that's not to say that the market can't see some kind of a pullback. And I don't know if we're going to get down to 215, 214, trading a little sideways. But I think over the next, let's say, 90 days, 60 to 90 days, this market would not surprise me to see a new high taking out the 43, because based on this simple little, I guess, measurement objective, and also looking at another little tool, I'll just throw that up right now. Let's go to studies. Let's edit studies, and let's see if I got it in there, and I don't. So we're going to close, and we'll go to studies, and we're going to just add a study. And let's take a look at the quarterly pivot together real quick. So the current quarterly pivot, we're at that resistance. So if we back and fill and stay still and remain, keyword, remain positive by staying above the quarterly pivot, and we still see that the market can maintain a structure of higher highs and higher lows, think of this. If this is the low point, number one, and that's a high point, number two, you take that measurement and you add that distance to this low on a breakout, we're talking around 249, 250-ish to the upside targeting. Now, this again is a weekly chart, gang. And one thing that I noticed in today's trading session, people were buying boatloads of the 230s, the 240s, and the 250 strike calls going all the way out to January. People were paying heavy. Now, maybe they're spreading those off to reduce their cost basis, but I'm not the only one. And I think that's important to acknowledge that I'm not the only one that likes the Russell. What's interesting about this particular chart as well is this is the McClellan oscillator modified, and why I call it the JP oscillator. We modified it for moving averages to account for the fact that the Russell has 2,000 stocks, and we adjusted this to represent the Russell having 2,000 stocks. So it has different overbought and oversold readings. On a weekly basis, the market's going up and it's oversold. So can you imagine this market has potential when we start to turn around again and start a more positive move with the advanced decline? That means not just a few cap-weighted sector stocks in the Russell, which is regional banks right now and medical or biotech. Those two sectors is what's driven the last week and a half rally. You start to see other areas of the small cap sectors start to participate in that rally. And I guarantee you, man, 240, 249 is going to it's going to look, well, that's going to be a mild move. So I'm just thinking that longer term, the two things that you want to kind of focus on is what has been the condition of that rally? It's been on greater volume. So if you ever hear people talking about this, that the Russell, can it move? According to the technicals and history, yes, it seriously can, as well as the seasonality. So in tonight's session, I just wanted, it's been a while since we've done these. And CryptoCat says, you are way more interesting of a speaker than Joe. Who the hell's Joe? Joe. You got my attention, CryptoCat. Thanks for participating. Any event, there's a couple things that I wanted to leave you with. So, a lot of people do webinars, and this is certainly, I guess, a webinar on a I don't know what you want to call this. Let's see, what time is it now? 8:15, and it looks like the presidential address, is it already over? Oh, Sleepy Joe. Thank you. Is it over? It's already over? Oh my goodness. Here's the deal. A trigger, a call to action, determined by a function of a price movement, right? I'm going to give you one. Here's one from a workshop we did that I wanted to share with you guys, that if you don't have PPS, if you don't have Thinkorswim, put up a 4-period pivot point moving average versus a 12-period pivot point moving average. And the pivot point is defined as the sum of the high-low close, then divided by 3. That's what it will look like, all right? Very simply put, moving average. We've got an average, high-low close divided by 4, moving average. So I got a 4-period, as I said, and a 12-period. There it is. So what does that do for me? Well, you can look for moving average crossovers, and that means the mathematical formula, not just any type of a moving average, but the pivot point moving average, the typical price. And you're measuring short-term versus long-term. So this is one concept that we've taught for years. And as you can see, I mean, maybe some other moving averages and things like that can do a little bit better. But one of the things that, here's the proof that this is a 12-period average high-low close. So the blue was just highlighting that's the 4-period, and the gold is highlighting it's 12. Now let's throw over pivot points. Now, what did I say at the beginning of this presentation? I said a lot, but I did say when the market trades north of the pivot point, which is the high-low close divided by 3. And in all of my work, I define the actual pivot point by color coding it as blue. So remember TradeStation, I started off and I said, hey, let's take a look at, I think I was down here looking at the biotech sector, and I was showing you guys the, let's see if I can get to it again. Here it is, drug sector, healthcare, right? Everything's trading above the pivot. So that's pivot point. That's the weekly pivot point. So a lot of stuff trading above its weekly pivot point. If the market's truly bullish, it trades north of the pivot point and gives us a decent buy signal, a PPS. So GlaxoSmithKline is trading above its weekly pivot point, but it didn't generate a daily buy. There's your weekly pivot point, hard to see, but it's blue line right there. So it traded back above its pivot point. Okay, it's got my attention, but it's not in a buy signal. I'm just looking at a couple things of how do I define a trading strategy. And that's what I was trying to help you guys and uncover in tonight's session. How do I get my trade results? How do I pick out certain strategies? What am I looking at doing? So, it's a combination of looking at price, market condition, indicators, the right indicators. I don't need 30 different price. I don't need Bollinger Bands and Ichimoku cloud charts. And I'm not saying that those don't work. I'm just saying I need something clear cut. And I find that pivots tell me today, more often than not, one of the best leading price indicators out there in this world. And I use them. I use them to the point where they're in my weekly market report, which does pretty decent. But how do I look for opportunities? And some of the opportunities is I have a systematic PPS buy and sell signal. If you don't have that, I'm giving you an alternative, and I combine that by comparing and looking at whether or not the market's trading north of pivots. So if at the end of this time session, it looks pretty negative. The market went down, it's below falling moving averages. A couple days later, right at the end of the month, what happens? We get a higher high and a higher low. And the market is in a bullish, higher red, higher green, and it's trading north of pivot. That's something I'm not going to look at selling short, am I? No, I'm looking at a buy signal. So many times, and this is one of our clients that sent in questions, and I thought it was such a great question because he quoted me, and because I'm very consistent in what I sometimes say, and or I'm redundant, and in my live room and in courses, he can quote me even to look out and understand what is the current condition of the trading environment. What is the SPY? Where are we at? What is the 10-day ATR? It's kind of funny because that's one of the segments that I think is very important to understand. If the market is truly bullish, ATR does not really rise, especially in equities, and you want to be more careful. And remember, that's where we came up with the concept for this week is one of the, I guess, the trade du jour, the trade the week was, and I hadn't put out a sell recommendation in the SPY in a while, and we came out with that option. Could it have been better? And we did September's. Should I have done August? Should I have done weeklies? Listen, I just couldn't predict the exact second the market was going to go down, but I did predict a nice high probability trade strategy, and they did pretty well. So bottom line is, I think that even my clients tend to listen, and it's kind of some of the interesting aspects of their questions, because it makes me happy that they do look at this stuff. And one of the things that they, as I just shared with you about the ATR, is what this gentleman was looking at. This is his chart sent to me. John, this is what I noticed. And he wanted me to grade him. And I'm like, yeah, perfect. Look, market's going up and the ATR is going down. The market's starting to go down and the ATR is going up. The market's kind of flatlined, but the ATR is mild, which might represent what? A calm, cool market, not going anywhere or possibly rallying, maybe also a lower VIX reading, because it's very similar in if people are getting nervous and market ranges are going up, people are going to start to buy puts, and then you're going to see a spike in volatility. So in that period of time, it was kind of interesting that what I'm sharing with you, what I've shared in the past, it is something that, and it works, and it's worked right now this week. So I just wanted to say for many of you guys, I think if you're looking at trading, you can do a lot of different things, whether it's TradeStation by setting optimized settings, and I don't want to say that I cheat by using a trading strategy in a system, but we created that product, which I find to be one of the best out there for regular retail traders. And we use it in our live trading room. I can maintain it. We can use it for any product. We trade it for the more active products, of course. And it's a great, at the very least, if people don't trade every single trade, it's a good gauge and a good tool to say, hey, this thing actually went short. And if it works, it'll probably be, at least in the SPY or the Qs, if the trade doesn't get stopped out with a loss or the trailing stop doesn't get triggered, it's going to have a holding period of, on average, of 3 days. And so walking away with that, I think, is another thing that keep you more focused and grounded and disciplined to be able to spot certain things rather than looking at 20 different types of market analytics. And I think that's what's kind of important. So I just wanted to say thank you for joining me tonight. This was a more of an eye-opener of, and I didn't know President Biden was going to give his rejection speech. I didn't know today would be the day that we saw a 3.5% decline in the NASDAQ. So I think for a lot of you guys that don't know my work, at the very least, do know that I don't wing it. Okay, so we could say that. We definitely don't wing things. So the other aspect is a lot of you do not know that we have a live trading room. And I wanted to bring that to your attention. If you're interested, by email, send it to mperson@personsplanet.com and say, hey, give me a trial to John's newsletter and give me a trial to this trading room. Now, I do come in and I make once in a while, and I'm not going to lie, I make some asinine statements once in a while. I try not to, though. An asinine statement is more like, it's just so hard not to make fun of pop culture at this point in life. I just think you just can't make I don't think Orson Welles could write a book of what we see going on. President assassination attempts, presidents saying they're sharp as a tack, but then quit. I mean, you just can't make stuff like this up in the political front. And every once in a while, I try not to impose my will on others. I try to be more professional with trading, and that's what we put out as a lot of trades. And I use it with fact-based studies like I shared with you tonight. So moral of the story is I would encourage everybody, if you're looking to improve, if you're looking to get better and you're looking for a systematic program, I'm not promising that every trade is going to be a winner by any stretch of imagination, but on average we do pretty well. And we base it off of scientific or mathematical studies using pivots and algo programming. So with that said, I thank you all for attending. I hope you got something out of tonight. Couple things you walk away with. What's the importance of ATR? What's the importance of understanding what the average trend or length of moves are in markets? And what type of other triggers could you look at? And how do we integrate that with person's pivots? With that said, thank you all for coming in tonight. And I hope if you did want to see President Trump's, I don't know what was it, a 10-minute speech saying goodbye, I guess you could, it'll be on YouTube, right? So thanks again, everybody, and God bless, and we'll see you at the next event. Thank you all.